All right, one more time. All right, so NFP just released. They came up, they took out this higher high right in here, which was expected at the release. I mean, we were already floating right at it, so it was obvious they were going to do that. As soon as they did that, they came down, took out some lows, which is also expected, and then now we're starting to trade up higher. We don't want them to come all the way up here. What is that level? It's just some other buy side liquidity. Okay, it's really high up. We don't want them to go up that high. The reason why we're okay with letting today do whatever it wants is because we're saying, hey, we're going to get a new weekly candle next week. Okay, what happened yesterday? Giant bullish displacement candle. There's a little gap right in here. So our thought process is okay, today can do whatever it wants to do. We just hope it comes back down and retraces a little bit before it closes, which should happen considering weekly power of three. And then we would anticipate price next week to open, consolidate a little bit, manipulate, trade down into the buy side and balance, and then continue trading higher. So that's the thought process I have in mind. This is a nice bullish PD array, big old buy side unbalance, okay? Fair value gap, whatever your heart desires to call it. But it's a good level for next week to trade down into and rebalance. If you look at that on the 4 hour time frame, it also blends with this nice fair value gap in here. So that could be next week's low. I do notice this candle right here, which is another level, little fair value gap with a bullish order block right here. So if this one were to get traded through next week, your eyes are going to go to this one and then stop loss at the bearish candle body low. And I'm pretty confident that's what we'll see next week. One of these levels will hold up as the weekly low. Yeah, next week. We got to see how today closes first, obviously. Okay, because they could come all the way, they could start trading lower if they wanted. That's why I'm saying it's not smart to do anything today unless you just now got lucky and caught some buys. Pay yourself or something. I don't know. I'm not making any predictions this morning. I just told y'all I'd hop on here for a little bit for NFP. But that's our expectation for next week. So if we're going to get a weekly candle close and we're going to get a new week, like I said, let's open up our weekly chart now because that's very important. Who would have guessed that our current week would have closed bullish way up here when at the beginning of the week it was once a giant bearish candle and everyone and their grandma then thought price would come for these lows, and then this fair value gap down there. And then if you guys can recall me saying we don't want to marry that idea yet because the trend is bullish and we're still inside of this bullish order block. But I was explaining, I don't know if the audio was working, I was explaining how no one else is going to view this as a bullish order block. Only finesse. And then you're seeing right here why. Okay. You don't want to marry the thought process of price coming to this fair value gap until the bullish higher time frame PD array gives out. So if price would have kept trading lower and came for these lows, then I'd say, okay, we're coming down here. And that's exactly what I taught you guys a couple of videos ago. I think I've said this a bunch now because we've been trading inside of this range for the past 3, 4 weeks. But I like what I'm seeing Today could even close higher. So what am I going to do? If we get a closure, something like this, what do y'all think I'm about to draw out? I want you guys to participate and help me. Let me see if you guys have been paying attention. What am I fixing to draw? I'm fixing to draw something. And it's in regards to next week's anticipated price action. Yes, good job, guys. Great. Your minds are working. I know it's early. I know we're tired. It's been a long, stressful week, kinda. Here it is. Wick high, down to the body. I'll extend that out and I'll drop down to lower time frames and see what blends with that. Oh, what do you know? What do you know, guys? No, we don't do orb. No, opening range breakouts. We don't do none of that stuff. What blends with our weekly EOB, guys? That's the next question. Is there a PD array on the daily that blends with our pink shaded area? Absolutely. The same exact buy side imbalance right in here from yesterday's bullish price action is going to be the PD array. I'm I'm not sure the skill level of the majority of people. I think the majority of people know and are very familiarized with ICT concepts that are in this group. I feel like I hope so at least. But if you're not, that's okay. Speak up and I will dive deeper for you. But we have this buy side imbalance blended with the weekly EOB. So we're gonna be so we're that's why we're calm about today. This is why we're calm because we know next week what it's most likely to do. Thank you, Rainbow. I appreciate that. I've always took pride in my teaching. Sometimes when I draw this stuff out, there's no specific. I've gotten this question a lot too. Why do you draw your zone like that? And I'll be completely honest. Shub, I appreciate that, bud. And then you too, Rambo. I really do. Awesome comments. So there's no specific reason for me drawing it like this. There never was. Eh, When I draw a zone, usually the very end of it on the left side is what I'm representing. Okay. So if my zone is like this and you guys are confused about what I'm highlighting, look at the very end of the zone on the left, and that's usually what I'm representing. Okay. So if I were to draw a zone like this, I'm representing what's on the left. It's the buy side imbalance. Okay. And to draw it the very correct way, I'd put it right here at today's daily low. And then I would draw it all the way down to this candle's high. Technically, or not technically, but yeah, that is the entire buy side imbalance. But as y'all should know, this is not needed. They don't have to fill the entire thing. We actually prefer them to stay above the halfway midpoint of that. So if you take out your fib, I'm going to draw it of the candle. There's different ways to do this. Like some people are going to draw it from the candle body to the body, and then they're going to find equilibrium of that range. Some people will draw it from, they'll take the fair value gap high, or the low the fair value gap to the starting point of that fair value gap, and they'll draw that like that, and they'll think that. But in this case, more, I mean, they're going to stay in the upper portion of this buy side imbalance. Long story short, that's what we want to see, okay? And that's for next week's low, the blue shaded area. So now when we zoom back out to our weekly time frame, we now have a refined level that could potentially hold us higher. And now when we're looking at it on a weekly time frame, we would think next week, we don't want to be buying next week. So this is how you refine your EOB, okay? You guys know I like to buy at the top of it, right? But if I were to do that, look at all the drawdown on the weekly time frame that I would um have to sit in. I'd get screwed. So if this was a 5 minute time frame, you guys know I would wait for the next 5 minute candle to open, trade down, and I would start buying as soon as they trade into the wick of the bearish candle. But we just redefined our level to this blue shaded area, okay? So we don't want to buy right away now. We want to buy down here, okay? And I don't want them to even come to the body, the opening price. I don't want them to come that far. So that's also what makes me believe when I go back to the daily time frame that they'll probably just fill in like right in there, somewhere right in here, and then trade higher. That's my anticipation for next week, okay? And then if that were to happen, obviously, it'd make next week's candle open, it would trade down, it would look bearish, it would find a low, and then start trading higher. And it would leave a big old wick on it. And it would look something like that. Yeah, I can't make it any skinnier, guys, because watch, if I make it skinnier, then I can't put this trend line. It's weird. It does this. It puts it on one side or the other. It can't go in the middle, and I hate that about TradingView. So I gotta make that dang thing. I gotta go like that. Now it just looks funky. Hold control. That's not doing nothing. I think it's TradingView, brother. I think it's just TradingView. But yeah, then we could see next week do this. Now, why should we trade up here? Yes, we're in a bullish trend, guys. The trend is your friend. We're in a bullish trend, and Nasdaq's been rallying higher for a very long time now. You see that? And what would this do? So we have how many more weeks for this month? Three more. Three. We just started this month, so after this weekly candle closes, we have three more weekly candles until what happens? Now, this is the tricky question, all right? Who can answer this? What's going to happen when this month of September closes? Who can answer that? Now I'm testing you. Who's been paying attention? If you're new, probably don't know, but I want to let's see some of the OGs, the day ones. I've been talking about it for a while now. There you go. We're going to get a 3-month close. So that makes it relevant to pull open a 3-month candle. If you recall on July 1st, the analysis I gave out, what I said it's going to happen over the next 3 months, starting at July 1st and ending on October 1st. I said NASDAQ should be bullish due to this. My 3-month enhanced order block right here. And there was a reason. Yes, if you guys are dying to know, I'll tell you. But I draw them out, wick to body. How did you know? Why did you only draw it out like this? Because I knew they weren't going to come all the way down. I was able to refine my level, and I knew they would respect the top portion of the wick, the EOB. I knew it because I break this down and I look and I come to a logical, you know, realistic explanation that makes sense. Yeah, the EOB is candle anatomy. That's what I figured out. Is the anatomy of a candlestick. Sense. I'm gonna call you sense because I don't feel like saying sex every day, multiple times a day. So sense. I mean, it's based off of a couple things. You can break it down, but I can recall my exact one was the daily. When we were trading in here, that first, I think that was July, no, that August. July is when that candle opened, July 1st, right here. They came into the EOB July 1st right away. The pink shaded area is the top portion of the 3-month EOB. Then we started trading away from it. We're testing the top of it right here with these daily candles, as you can see, finding support, traded away from it. This is a balanced price range, all in here. That's a balanced price range. There's no reason to go under there. So when August opened right here, the last day of July opened, and that's when we saw this giant bearish candle. And then the first day of August, what did it do? It opened and sunk lower on August 1st, whatever day that was. Where did it trade down to? Traded down to the balanced price range. It traded down to the 3-month EOB high. Found support the very next day. Okay, so this bearish candle here, the first day of August, that was NFP. All the way down. The very next day, which was the following Monday, because if you look at the dates, it goes from August 1st to August 4th. The following Monday, engulfed above the bearish down close candle after hitting the 3-month EOB support level. There's your change in delivery from bearish to bullish. The next two candles open, trade down to equilibrium of the bearish order or the bullish order block, which is the bearish candle. Find support, engulf above the next one. I remember calling this trade out in real time. Once price looked like this, I already had all this stuff in mind that I'm telling you. This is education right here now. Once we engulfed, There's my EOB. You guys want me to teach the EOB more and more and more. Some of y'all still can't wrap your heads around it, which is okay. I'll show you every flipping day. There it is. So I'd expect the next daily candle to open, trade down, continue trading higher because we're in a bullish trend. We're coming off the 3-month EOB. We engulfed above NFP's bearish candle. We traded down with these 2 days, found support at equilibrium, engulfed. There's the buy right there. So, long story short, we're fixing to close out the 3-month candle. Therefore, you guys know how EOBs respect and react. They normally react pretty well, right? So that's why I was anticipating this 3-month candle to rally higher. Keep on making all-time highs. I told everyone in my family, they asked, "Oh, can you give me some advice? What to buy? What to buy?" And should I buy crypto, Bitcoin? I'm like, no, dude, just put some money in damn stocks. Put some money in the classic NASDAQ and the S&P. These markets are gonna go, they're gonna keep gaining strength and keep going higher, probably forever until there's no longer a market. To be honest, guys, probably forever. Probably. And if you guys want me to break it down even more, now I know a lot of you are new to me, so you didn't see me talk about all this before it happened, but I did. But now look, this is your yearly. This is why I say price is probably going to go up forever. Here's your yearly chart. Looking at this, based off of the stuff I've taught you and the things you may already know, each candle here represents 12 months, 1 year. If anyone's trading today, you deserve to encounter some loss. I already told you, don't do it. We nailed yesterday's trade. I gave you a golden analysis on Tuesday. Tuesday buys. Beautiful. I'm just going to start drawing. I'm going to put the lipstick on this chart. And you guys, as I'm doing it, ask yourself if it's everything that you see also. Okay. You ready? You guys are fixing to get the best education you've probably ever gotten on directional bias and order flow and how to find just where the markets are going. I promise you, no one's going to explain it like this. Promise. I just did 3 lines. This is all you needed to know right here. This is it. This is it. Okay. Yearly bull. So we have a yearly bullish fair value gap. They trade down into. We rebalance it. We fill it. And then for 2023, what happens? Yeah. Lifetime time frame is bullish. What happened for 2023? Can someone tell me? Ben says he's never heard anyone bring up order flow. That's strange, Ben. Order flow is everything. 2023 and 2022 filled in the bullish fair value gap. They respect it. Then 2023 trades above the down close candle, creating and confirming a yearly bullish order block. If you haven't been paying attention to me on January 1st of 2024, so last year on January 1st, the first day of 2024, I said NASDAQ just created a yearly bullish order block and it's going to go higher and it's going to go a lot higher. What did 2024 do? It opened, traded down to the yearly order block, and then blasted off higher. It doesn't matter if this is an hourly time frame or a 1 year time frame, yearly time frame, 12 months. It don't matter. It all works the same. But if my yearly time frame is respecting bullish order flow like this, it's safe to say we want to see everything below this respect bullish order flow and create bullish order flow. So now here's those same levels, okay? Here's the 6 month time frame. When we traded down to that yearly fair value gap right here, with this down close candle right here, this was the first half of last year, or 2022, the first 6 months, the first half of the year traded down, filled it in, and then the last 6 months of the year engulfed above the bearish candle here. That's a bullish pattern that y'all see me use on lower time frames. They didn't quite come down to the wick high. Sometimes they don't have to. Sometimes they just don't. But they opened, traded down, rebalanced the bullish candle, and then kept trading higher above the bearish candle, 2022's high. Again, that level is just a yearly order block. We engulfed above it. There's your yearly bullish order block. So it's safe to say during the year of 2023, you could have already predicted that price right in here, the first 6 months. And then when the second half of the year opened in 2023, it's safe to say you could have already said, okay, I think we're going to trade above that bearish candle high. Because when the trend is bullish, what do we expect to happen after a bearish down close candle? We expect a larger bullish engulfing candle. So you could have arrived at your analysis during the second half of that year saying, yep, oh, in these next 6 months to close out the year, we're probably going to trade above these highs. And then they did. That's when they confirmed the order block. Now there's the order block. They open, trade down into it. This is the exact level I gave out. And then they tapped it and blasted off higher. Now we have 2025, traded all the way down the first half of the year. What effing price level did we trade down to? You think that's random? No. That's why order blocks is candle anatomy. That's why that's literally the only thing I get entries off of, and rebalances and fair value gaps. But that's why I'm so, people are like, oh, order blocks are nothing. Order block, blah, blah, blah. It's oversaturated because people, they think, oh, everyone knows what an order block is. So then they quit. They quit showing relevance to it because they think, oh, if everyone knows about order blocks, they're not that important, you know. Oh, well, my order blocks never work. Everyone knows what they are. They're not special. They're not special because they're not utilizing order blocks in the correct way. They don't have the right thought process, the right train of thought. That's what they're lacking, and that's what you're getting here from me. And then 2025, all the way down. At one point in time, this was a giant bearish candle. Boop, blasts off higher. Then we can break it down even more. Then we go to that 3 month. This is US Tech, all the way down to the yearly order block. Then we engulf above a bearish candle with the nice wick on it. That's what we want to see in a bullish trend. And then I just explained to you why the trend is bullish, because this is top-down analysis. So how do I view today? You shouldn't even be asking me that question, buddy, because I've already emphasized that I'm not trading today, and neither should any of you. We had beautiful price action yesterday. We had beautiful price action on Tuesday. A couple scalps here and there. Nothing crazy. Yesterday was great, but took a lot of patience. But you should have no desire for any opinion on where price is going at the moment. At this very moment during this session, it should be relevant. I've already given my opinion. I have. If you're late to the party, you'll have to rewatch this. I'm not going to have a voice today if I have to repeat myself over and over and over. Big old bullish candle. That's great. That's cool. That's fine. That's dandy. But we're going to anticipate price to be pulling back to some degree. We don't want today to close like how it currently is. We don't want that. So from now until today's candle closure, whatever time it closes, 4 p.m., 5 p.m., we want to see price come on back down some and leave a nice wick on there, because the farther away we trade from this, the worse. We want it to retrace some. And then here's the weekly EOB. We're going to expect next week to hold up as support to go higher. Okay. Yeah, this session is full of gems. And if you don't rewatch it, you're, I don't know, you're missing out, because the things I just gave you about order flow is, you know, everything I know. Yeah, you know the PD arrays. Yeah, you know what an order block is. You know what a fair value gap is. You know imbalances. You know liquidity. But it's the train of thought that's going to make the difference. How you utilize all of that stuff with every market condition. You want to hear something horrible, Moon, Chief Moon? I knew all this stuff back then, and I knew all this stuff was going on, and my dumbass still wasn't trading NASDAQ back then. My dumbass was still trading Forex, and I hate myself for that because, like I said, this is not hindsight. Everything I just went over with you guys, I was watching happen and I was posting it on my Twitter. You can scroll back to January 1st, 2023 and 2024, and you're going to see my posts on Twitter talking about all this stuff. And I wasn't trading it, and I hate that. I was stuck on Forex being just ignorant and unwilling to make a change and do something different. ICT started doing the indexes or indices back in, he started that and made that popular in 2022. I was stubborn. I didn't want to put in the work to learn a new market. I thought it was a whole big deal. It was overwhelming. He was posting like 2 hour videos every single day on YouTube, and I just could not put myself through that. And I never watched not a single one of them. I was messing with Forex still. A lot of good trades, made some money on Forex, but no, I should have been trading NASDAQ because with everything said, with that bias from top down, from yearly all the way down to a 1 minute time frame, you'd be in there every day only looking for buys. And you could have done that for 2 years straight, 3 years straight, only pushing the buy button, never ever touching sell, never putting the word sell in your brain, only looking for buys because of the top down analysis from yearly all the way down to daily, 15-minute, whatever. You're anticipating price to move higher. Any pullback you see on those lower time frames is only setting up and it's only retracing to a discount, OTE, PD array of some sort just to go higher. That's all it is. And that's how markets work. 2024, I think it was 2023. 2023, of course, this one doesn't show it. That's when I got to go over here to US Tech. 2022 was the sell. That's when ICT first came out and started teaching and trading and making it popular about trading futures and the indices. 2022 was his year. So I guarantee you, if you go back to his YouTube and look at all the videos, he probably uh, had a lot of, he was probably selling a lot. He's never talked about this time frame or any of these levels, but I highly doubt it. I don't know. This is just my thoughts. He has to be aware of these same levels I'm aware of, like he has to be aware of it, but normally he would speak on it. Why didn't he ever speak on this stuff? That's what always confused me. Like, why these levels are so relevant to your day-to-day order flow and your week-to-week, month-to-month order flow. Why didn't he ever speak of these levels? Not EOB. I'm talking about these time frames. Everything I just went over with y'all from the yearly time frames down to the 3 month and all of that. I was just wondering why he never brought those up. That's all. I feel like I feel the same way. I feel like he doesn't want to give this all out. He has to be, he has to be damn made aware. He's well aware of this. He has to be. But like you said, he doesn't want to give it all out. Honestly, it's just, and then it comes down to the individual teacher. I teach a certain way. If you go watch anyone else teach, see if they can keep you focused and entertained like I just did. Probably not. You're going to get bored and it's going to sound stupid and it's going to be boring and you're not going to be able to focus because they're all over the place. I can get your attention and keep you focused. No, I do keep it simple, and that's why I don't blow up on Twitter and stuff like that because I'm using order blocks and fair value gaps and order flow and liquidity and breakers, and that's it. Everyone thinks they already know that stuff, therefore they don't need to pay me any attention. Therefore, he has nothing to offer me. That's all it is. I did not want today doing what it's doing right now, though. I'll tell you that much. I don't know. I doubt it. There could have been a nice little entry right there. We have the sweep under the lows, and then we expand higher. The next candle starts to rebalance it, and then they close it. The very next candle opens and trades into there. There's your entry right there. If you, that's an entry model. And then when this candle opens, you're telling yourself, if we're going to go higher, they shouldn't trade back down to that fair value gap. Why? Because in this very specific example, we have this bearish candle. We want the bearish candle to hold us higher. And then you see, look left, there's the wick low, bearish candle. They hold us higher. There's that same fair value gap, but you can redefine it now. Here's the 3 minute time frame. Once we fill that fair value gap, what happens, guys, on the 3 minute? We just like the yearly chart that I just showed you. Literally the same exact thing, but this is a 3 minute time frame. And I'll show you. Look. Fair value gap, bearish candle fills it. The very next candle engulfs above it. Open up the next candle, trade down to the order block, trade higher. Go over here, go to the yearly, same thing. See, same thing. Fair value gap with the down close candle, they fill it with the bearish candle. Next candle engulfs above it. Next candle opens, trades down to it, boop, trade higher. Same exact thing. That's what fractal means. This is a yearly time frame. Take it to a 3 minute. There it is, right there. Fair value gap. With they fill it with the down closed candle. Next candle opens, engulfs above it, confirms it. Open, boop, trade higher. That could be your model, right there. So when fair value gaps get filled, so if you're anticipating price to go higher, and a bullish fair value gap gets created like this, and they fill it with a down closed candle, generally the next candle will do that. I like seeing the bullish fair value gap get created with bearish candles, and then we go. And I got so many examples of price doing that very same thing. I have a lot of them in my collection, just for shits and giggles. 1 minute EOB, blended with what? Blended with the fair value gap. You could take your fib, you could go from swing low to swing high. There's your OTE. And that's it. But like I said, I got some things I got to do today, guys. It's about that time. Sorry, no buttons today, but y'all know it's dangerous, okay? Don't give me no crap, please. I'll go ahead and post the recording right now as soon as we get off here, okay? This can be a this is pretty much a course. All right, y'all. Remember, we're anticipating today. We want today to retrace a little bit before it closes. The further down we retrace, the better. It'll make next week's um thought whatever I want next week to do, the weekly candle that I talked about, it'll make it more realistic. We need price to come back to make it seem more realistic. But all right, guys, I'm gonna hop off here. I got some errands to run this morning. I love you guys. Thanks for coming out, and I will see y'all in the Discord.